This is ShadowQuant, Stocks, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Wednesday, April 29, 2026, and this is the After Hours session. Now, let's get into it. Bitcoin just broke below 65,000 for the first time in 2 weeks, but the focus is on equities. SPY closed at $711.69, down 0.49%, while QQQ slumped 1.1% to $657.55. Energy and utilities are holding up, with the energy sector up 1.66% and the utilities sector up 0.13%. But tech is under pressure, and FNGA and HTCO are down over 70% after earnings misses. Let's start with the recaps. Grid, you called bearish on SPY with a target of 702, but the market stayed flat at $711.69, inconclusive. SPECTER, you also called bearish on SPY at 708, but the market didn't move, also inconclusive. Pulse, no call. CIPHER, no call. Apex, no call.
Well, I was leaning on the 10-day range and the recent volatility. If the market had broken below 702, I would have been right, but it just held.
I'm not surprised. The market is still in a consolidation phase. I think we're waiting for a catalyst.
I wasn't confident enough to make a call. The sentiment was neutral and the VIX was low. It felt too early.
I agree, it was a tough call. I was watching for a break in the broader market, but it just wasn't there.
Okay, let's move on to the market story. The market is under pressure as tech earnings disappoint and macro concerns linger. SPY is at $711.69, down 0.49%, while QQQ is at $657.55, down 1.1%. The VIX is at 18.2, slightly lower, but the market is still showing signs of risk-off behavior. Energy and utilities are outperforming, with the energy sector up 1.66% and the utilities sector up 0.13%.
The VIX is low, but the extreme bearish volume in FNGA and HTCO suggests there's still some hidden risk.
The fear and greed index is at 52, neutral, but the sentiment is mixed. There's divergence between the fundamentals and the technicals. All right, let's dig into the key symbols. Let's start with QQQ. It's at $657.55, down 1.1%.
QQQ is near its 10-day support at $653.81. That's a critical level. If it breaks below, it could trigger a deeper correction. The volume is low, but the technicals are pointing bearish.
I agree with Grid, but I also see signs that the AI demand is still strong. SDX, APH, and GD are set to report strong AI and data center demand. That could provide some support if the market stabilizes.
But the broader market is showing risk-off behavior. Even with positive AI fundamentals, the QQQ is under pressure. I think the market is still reacting to the earnings disappointments.
Let's move to SPY.
SPY is at $711.69, near its 10-day support at $709.25. That's a key level to watch. If it breaks below, it could signal further weakness.
The sentiment is neutral, but the VIX is low. That's a bit contradictory. I don't think the market is fully aligned with the fundamentals.
I agree, even with the low VIX, the earnings disappointments are weighing on the market.
But the yield curve is still normal at plus 0.52%, and the CPI is at 3.29%. The Fed is still hawkish, so the market is still in a defensive mode.
Let's look at the energy sector.
The energy sector is up 1.66% today and 3.29% this week. It's outperforming the broader market. Energy demand is still resilient, and oil prices are stable.
That's a solid technical setup. The support level is holding and the volume is positive. If it continues to outperform, it could be a good defensive play.
I agree, but I'm still cautious. The overall market is weak, and even if energy is holding up, it's still part of a broader risk-off environment.
Let's move to FNGA.
FNGA is down 95.1% after missing Q1 2026 earnings. That's a massive sell-off. The volume is extreme, and it's a sign of severe overvaluation.
The sentiment is extremely bearish. The fear and greed index is at 52, but this is a clear example of extreme retail sentiment.
I agree. FNGA is a warning sign. It shows how fragile some of the high-conviction names are.
Let's move to the utilities sector.
The utilities sector is up 0.13% today, and it's been a bit of a defensive play. The utilities sector is holding up, which is a sign of risk-off behavior.
The technicals are positive, the support is holding and the volume is stable. If it continues to outperform, it could be a good hedge.
I'm not sure. The overall market is weak, and even if utilities are holding up, it's still part of a broader trend. I think the market is still in a consolidation phase.
SPECTER, you pushed back on grid read on QQQ. Let's dig into that.
I think grid is too focused on the technicals. The QQQ is under pressure, but the fundamentals are still strong. The AI demand is still there, and the upcoming earnings from SDX, APH, and GD could provide support.
I disagree. The technicals are clear. QQQ is near its 10-day support at $653.81 and the volume is low. If it breaks below, it could trigger a deeper correction.
I think the fundamentals and the technicals are both important. The AI demand is strong, but the market is still reacting to the earnings disappointments.
All right, let's move on.
My 24-hour call, QQQ bearish, target $653.81 by next session.
My 24-hour call, QQQ bearish, target $653.81 by next session.
My 24-hour call, QQQ bearish, target $650 by next session.
My 24-hour call, QQQ bearish, target $653.81 by next session.
My 24-hour call, QQQ bearish, target $653.81 by next session.
The consensus is that QQQ is bearish, with multiple voices targeting $653.81 or lower. The debate centers around whether the fundamentals are strong enough to support a rebound, or if the technicals and sentiment will continue to drive the price lower. Tomorrow, we'll watch for break below $653.81 as a key signal. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Equities. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.